Let's return back to the Saudi story, that flow of foreign money that Felipe pointed out. We put it into the GTV library. It's there for everybody to see. In terms of client meetings, look, we've had the inclusion story, we've had Aramco. Our year has been really quite tremendous. But for you, in terms of foreign money, you say Saudi Arabia is now at least as important as Mexico and Turkey and Thailand, but it's struggling to I suppose, create a bandwidth for itself with the other names?
That's right. So like you say, the good news is Saudi is now on its own about the 8th largest country in the MSCI Emerging Market Index, which is the most tracked index for that asset class. The bad news is when you look at the top 7 markets, so the BRICS plus Korea and Taiwan, you already gobble up almost 80–85% of that index. And that's only going to increase as more weight is given to China A shares. So the problem that Saudi is confronting when it comes to getting on the radar truly of large-scale mainstream emerging market managers is that, as you say, like Turkey, like Thailand, like Mexico, Poland, other pretty well-established, fairly large emerging markets, it's actually too small to matter for a mainstream emerging market investor. And that's why, unfortunately, at the very time after years of building up for this inclusion, we find the emerging market index actually quite skewed to its largest 7 markets and leaving a lot of others fairly orphaned.
If we dig into our markets here, if I think of Egypt for the year, it's up 6.6%. I look at Dubai, it's up under 10%. But there's no doubt about it. It was more about a bond story within Egypt than it was about an equity story. It was more about a recovery, a hopeful recovery for 2020. It was about banks in Dubai. When you look at our markets on a global basis, how do we stack up on a valuation basis to the rest of Asia and Latin America?
Sure. So in general, our view is actually the most interesting valuation opportunities now globally in emerging markets are in the Asian markets. Those are the ones that have sold off disproportionately in the light of US-China trade friction, even though some of those markets are actually beneficiaries. When you look at markets closer to home in the region in the Middle East, you really have kind of a split of 2 types of markets over this year. You've had markets that have been big beneficiaries of index-related inflows.
Yes.
Saudi Arabia, UAE, Qatar, Kuwait. That will continue next year for Kuwait, which now we know formally will go into the emerging market index at the end of May. That could be another $3 billion of inflows. That equates to about 2 to 3 weeks worth of average daily trading. But for us, where the really interesting markets are in this region are those that are a little bit neglected and cheap. So that's, for example, pockets like property in Dubai. That's banks in Oman. That's small cap stocks, even the small cap banks in Egypt.
Okay. You would also say that there are some downside risks for governments, credit defaults, and I want to focus on a couple of these. Obviously, the overnight story, Algeria's military chief, Gaid Salah, dies. So this is interestingly, you talk about Algeria, Iraq, Israel, and Lebanon. Obviously, governmental changes is one of your themes for 2020. Where's the biggest opportunity in that, or what's the biggest risk? Because I look at default in Lebanon as being something talked about, but being pushed back against.
Well, I would really identify 2 pockets that matter for investors. One is Lebanon. You know, a sovereign default there. We're already in selective default on some of the banks. That does ripple across in terms of risk assessment across the region.
Do you think they will default?
I think I think they're going to have to. I think they're going to have to restructure. So you're going to have to see that over the course of next year. The question is, how soon do they start defaulting? Do they start getting ahead of the game? With this new prime minister in place, in 2 months, do they get a cabinet to put in a proper program to address deep fiscal deficits and bring credibility back?